All right. All right. Let me just make sure we're good. Audio's good. Everything's good. Microphone's in a good place. Let's do it. Let's do it. We're ready to get started again. So, this is just, you feel me, video documentation of my journey. And I'm going to be using this platform to have, like I said, digital documentation of the live work that I do. So right now it is Sunday, September 25th, 2022. And I trade the currency pair of gold. And so basically with it being a Sunday, walking into the week, we're going to do our fundamental analysis. So that's what I'm going to do. And then with the fundamental analysis, I'll take some notes in my journal. And then I'll do a roadmap, and then I'll pretty much just set out the plan for the week as I'll be coming to trade. I'll do positional trades before I go to bed pre-London, and I'll do day trades in New York. And or you feel me, positional trades and or day trades before I go to sleep in London, and positional trades or day trades as I wake up in New York. So cool thing is we're gonna just start the day like this. I like to start with reading an article, some of the most recent articles on investing.com. And what I'm going to do here is I want to be able to see what I'm doing real quick, because this is, once again, all new again. Oh, perfect. Literally, I pop up. What I'm doing real quick, because this is, once again, all new again. Oh yeah, this is clean. Oh, perfect. Literally, I pop up. This is very clean. I'm basically looking at what I'm doing right now on my phone just to make sure it looks good. And this is clean. Fuck yeah. Yeah, this is hella clean. I like that. I'm basically looking at what I'm doing right now on my phone. Cool. All right, very clean. So this would be my digital journal. The YouTube would be my digital journal of the activity that I do, the things that I look at and things like that. And then my journal is exactly what it sounds like, just a regular journal. And then I'll be able to live trade and things like that. So let's just get into fundamental analysis, trading gold. So let's just jump right into it. Gotta move a few things out the way. Gotta find a good spot for my microphone, as it's really just on a stand. In a good place for the computer. One moment as we get all situated, all these good things. Trial periods. Fuck yeah. All right. So while I'm here, I'll be able to get all the way situated. I don't have a desk yet. I just moved into my new apartment. But while I'm doing my reading, I'll also be writing at the same time. So if, it doesn't matter. So just getting into the journal real quick. It is September 25th, 2022. This is the week of, obviously the 25th to whatever. This will be my first week at being consistent 100%. All right, so we're in our fundamental phase right now. All right, so off the top, this article here, I'm gonna go back, start from Literally ground zero. So what I do is I go to investing.com, go to markets. I trade gold, which is a commodity. I go to gold. Then scroll down, go to news and analysis, go straight down to news because I do my own analysis technically. Go down to news. Here's some of the, most recent. So like the 23rd was last week. We're all aware that the interest rates came out. Let's see, Forex Factory. The interest rates came out last week for the US dollar. I'm going to update this. And I'm pretty confident they did a 75 base point hike. And this was last week, so I'm going to have to go back to last week. Which was the 21st. And what we got was the Fed's funds rate. They expected a 75 base point hike, and that's what we got because it's the actual. Forecast is good for currency. Yep. It's crazy because like when a Fed funds rate comes out, the usual effect is actual greater than the forecast is good for the currency, meaning that the US dollar would rise versus gold, of course. So leaning off of that, and then obviously there's a number of other things. But that was like the major shit. It's like now we're all digesting the fact that there was a major 75 base point rate hike, and so obviously the dollar gained some value. So in terms of like interest rates, the interest rate cycle is still on the way up, which is still a bearish factor for gold itself in relation to the US dollar. So now we're going to go back here. So that was last week. That's why the stocks tumble and dollar soars, bonds plunge as recession fears grow, all that good stuff. Recession, which is also a conflict. So we're just going to click on this first one, which is energy and precious metals weekly review and outlook, to see what other people are out here thinking about, other economists and things like that. So this is me actually taking the journey to read this stuff out loud and do what I got to do. So oil bears have a love-hate relationship with X, Y, and Z. They love to taunt the Saudi energy minister, and he loves to hate them. Crude shorts, of course. Basically, I'm looking mainly for like gold information. So like I may skim through until I see gold stuff. When the river begins. Let me see if there's a goddamn boom. Gold, there we go. Gold, market, settlements, and activity. There's no escaping the wrath of the dollar, as gold traders are finding out. Exactly. One of the yellow metals' most sacred support lines that held through its worst selling storms of the past 2 years, which was 1650 an ounce, broke on Friday as the dollar index continued with its onslaught of one 20-year high after another. You feel me? Bond yields tracking the 10-year U.S. Treasury note scaled 12 and a half year highs after the latest session peak above 3.8%. The yields reflect so-called real interest rates, or where the market thinks key lending rates set by the Federal Reserve would go. The Fed on Wednesday raised rates by 75 basis points for a third straight month in a row, bringing key lending rates to a peak of 3% or 0.8% below the bond yield level. So in my journal, in terms of interest rates, that's what in my interest rate category, I know for a fact the US dollar is on an interest rate hike cycle. So let's write that down. Then they said, to be sure, Fed Jerome Powell indicated there would be no let up for now in the central bank's hiking cycle as it battles to bring inflation raging at above 8% a year to its long-standing target of 2 per annum and 2 per annum, whatever. So obviously, so in terms of interest rates, we are on an interest rate hike cycle. Still combating inflation. You feel me? And that's, for me, I only have several pillars, like core concept pillars in terms of fundamentals. One of those is interest rates. The other one is inflation. The other one is conflict and resolution. And then the last one is economic health. So, and just, economic health and economic data. So for interest rates, how interest rates go, we're on an interest rate hike cycle, period, point blank. That is a bullish factor for gold, bullish factor for the US dollar, bearish factor for gold. And that's where we're at. In terms of inflation, it says right here that we are still raging at above 8%. So inflation still above 8%, and the target is 2%. So we're way above that. So you already know, like, until that's handled, it's going to be a minute. So gold's break below 1680 was a big deal, but it hasn't really been the catalyst for anything since, said Craig, analyst at online trading platform of Owanda. That makes a break of the 1650 support a secondary confirmation of the initial breakout and a very bearish signal, he added. Gold's benchmark futures contract on the New York COMEX December did a final trade of 1651.70 after settling the official session down $25 or 1.6% at 1655 XYZ per ounce. The session low was 1648.60. The spot price of bullion, and they always say this, which is more closely followed than futures by some traders, settled down $27, and then the spot gold's bottom for the day was literally 1639.96. Crazy. So now for outlook purposes, they're talking about gold going into the week ahead. Traders' reaction to 1640 would be critical for spot gold, says Dixit XYZ. Dixit. With spot gold cracking 1640, it could go towards 1620 next, or even 1600, he warned. Wow, so we're going to take that into account. Hold on, I got to use the restroom. But yeah, we're taking that into account. See, the cool thing, just talking to myself, the cool thing about this, bro, is they literally honestly tell you the sentiment. They tell you the outlook. They let you know, hey, these are the highest potentials based off of these factors. So at that point, bro, fundamental analysis is everything. Mixed with technicals and confidence and risk management and trade management and everything like that, bro, we could be very successful. So I'm going to use the restroom real quick. Come right back. All right. Yeah, I want to write that. I want to write about that. So we have interest rates. I got inflation. I'm going to just make a subcategory of outlook. All right, so basically what I'm about to write down is this stuff right here. So I'm about to write with spot gold cracking 1640, it could go towards 1620 or even 1600 next, basically. So I'm about to write that down. Gold could be headed toward 1620 and 1600 next. So that's bearish, like you hear it. So however, so he says however. Nice. However, if the dollar index starts to decline from 113 and head towards 104, the 1620 1600 zone in gold can attract value buyers. Feel me? That's very interesting. Which just means buy low. But 1560, which sits at a 50% Fibonacci retracement of gold's previous rally, is a more convincing rally point than that could bring bulls back to recent highs. As long as gold sustains above 1640, a small recovery towards 1655, 1665, with an extension towards 1678 to 1688 looks likely. Okay. So gold could be gold could be headed towards 1620 and 1600 next. That's one. Two, he said if gold sustains, I'm just writing and talking, above 1640, a small recovery toward, and that makes sense, toward 1655, 1665 with an extension. Extension toward 1678, 1688. See, bro, that's love, because now we have somewhere to aim towards the bottom and somewhere to aim towards the top. So in terms of my economic pillars, the interest rate, we're on an interest rate hike cycle, period, point blank. That is bearish factor for gold. Inflation is still hella high, with the target being 2%. We're looking at above somewhere ranging around 8%, meaning interest rates are going to keep going. Recession scares are obviously up, and they're going to keep trying to strengthen that dollar to combat that, knowing that at the end of the day, this is where market structure, market phase, market patterns, and entering at the proper point, definitely buying low and selling high, will take in effect, because it's not going to just tank and it's not going to just rise, but it's going to move in these waves. So at the end of the day, in terms of interest rates, I know that. In terms of inflation, I get that. In terms of, let's see some economic health, or let's see one more article from here, because honestly, I try to keep it very simple. Just by using investing.com and absorbing some of like the news headlines off of investing.com, and then looking at the economic data to come and what has happened. So basically, the economic data that's going to happen in the future, and then the economic data that happened in the past, things like that, balancing that out on Forex Factory. I mean, you really are able to get most of the stuff. So boom, 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 boom. And we know why it's doing that. So at that point, I'm really curious about the economic data to come. Very curious. So here's the fundamentals. We got the inflation. We got the interest rates. Let's try to identify some economic health here. So for the U.S. dollar and things like that, we got a little meeting tomorrow. We just got a couple meetings tomorrow. Light Monday. Then Mr. Jerome Powell's going to speak, probably just talk more about what the heck's been going on in the economy. So we can look at that. What time is that at? Fed chair, boom, boom, boom. Fed government. What time is his speech, though? I think that's a good question. What time is his speech? It says it's at, is this? So it's at 4 my time? Let me see. 4:30. So 7:30 New York time. 4:30 in the morning my time. Got it. So watch out for that. A lot of volatility going to happen while he's talking. Definitely be aware of that. I feel like that's actually a valuable note right there. I'm going to take a moment to actually, say that and figure out how to write that in my notes for the week in terms of, okay, if I'm going to be trading the New York session from, let's say, 3:30 to 5:30 in the morning, on average. And then at that point, on Tuesday, that's right in between my session, be very aware of volatility being very high during his speech at 4:30 and maybe sitting on the sidelines and letting things play out while he's talking. And then you got the durable goods orders and the core durable goods orders. Right now, they're projecting them to be a little bit higher by 1 point. Actual greater than forecast is good. Basically, what this means is the core durable goods orders basically means it's a leading indicator of production. Rising purchase orders signal that manufacturers will increase activity as they work to fill the orders. That makes sense. This data is usually revised via factory orders report release. Cool. And what it is change in the total value of new purchase orders placed with manufacturers for durable goods. All right, cool. So that's like, if they're projecting this to be a little bit higher, then that means like they plan on the economy doing pretty good. And that's, that could be a bullish factor for the U.S. dollar. Then we have some light, dude. So that's on what, Tuesday? So Tuesday is an interesting, kind of thick little news day. We even got new home sales, consumer bank, CB conference board? The conference board. Okay, conference board, consumer confidence. Looks a little higher. Actual grade and forecast is good. Okay, so they're projecting that to be good. I mean, shit, man. That's cool. Then let's look at Wednesday. We got goods trade balance. And then at 7 a.m., I'll already be gone. We got pending home sales. Talk. Crude oil inventories. Talk. Then on Thursday, we got final GDP and unemployment claims. Now, what it's looking like is they're anticipating, 2,000 more? Something like that. Actual less than forecast is good for currency, but right now they're projecting more, and that's not looking good. I mean, it's not terrible. It's not like, woo, but obviously they're projecting more. Talk. And then on Friday's usually casual core PCE price index at 5:30. I should be gone by that point. Makes sense, man. Makes sense. Looks casual. It looks like honestly looks like a casual week coming off of a very high impact news week with those interest rates. So, in terms of economic health, it's not looking terrible. Like, motherfuckers ain't doing that damn bad. So, I'm gonna write that. I'm gonna just make that quick note in my journal. Economic health. I'm gonna just write one word: decent. Not bad at all. You feel me? It's not terrible. And then in terms of, I feel like the major conflicts, that's another thing. That's another one of my pillars. Conflict. and resolution in this economy. Inflation, I feel like, is the biggest conflict we're dealing with, to be honest. You know, COVID's not happening right now, X, Y, and Z, X, Y, and Z. So basically, before we come to the charts, we have digested some of the fundamentals with interest, or some of the fundamental and economic core pillars of mine, which are interest rates. We are in an interest rate hike cycle. Inflation, we're still above about 8%, and our target is 2%, so we're still fighting that. Our economic health is honestly doing decent. They're already projecting what you can see, and the reason why I'm saying it's decent is because I can go to a whole nother. I can literally go to this right here and look up the current unemployment rate and how many people are employed and unemployed, and house production and all this extra stuff. But you can already kind of see, like, even with what's to come this week, the core durable goods orders, they're already kind of projecting a slight increase, as well as this one, they're projecting a slight increase, which is positive because that means our economy is doing well enough to where production managers are starting to order more things so they can obviously provide more things. And so that's good. Even coming down to our unemployment claims, which is on Thursday, our unemployment claims have a very slight change. Even though it's a slight increase, it's exactly that. It's a very slight increase. So we're not too worried about that. And then all the other like speakers coming to talk. So like we're cool there. And then in terms of our, hold on, I'm getting a call. In terms of our major like, yes.
I just called.
Hold on.
It's like. Sorry, babe.
No, you're good. I'm gonna try to. All right, we are back in action. Had to take that phone call. All right, but yeah, boom, boom, boom. All right, cool. So now from this point, knowing all those things and being able to take the notes that I took, now I can do a nice technical analysis. So for the technical analysis, this is what I like to do. I like to go to the weekly. I like to mark out the previous weekly low, the previous weekly high, and I'll wait till tomorrow to do the current low and the current high, because obviously it's like literally just open, so everything's right there. So what I'll be saying is this is the previous weekly low. That's what PW is previous week. And here's my previous weekly high, PW. Right? And as you look, even from like the highest perspective or in the highest time frame, you come here and you see here's a weekly low to the left, clear candlestick range, pause there. And then we can come back up here. Make that what? A weekly high. Now, that's really high. Like that probably, based off of our analysis, really, honestly, that has a low potential of being hit this week. It just does. Like nothing in the analysis said. Like literally the sentence of, he said, what did he say? Because I wrote this shit down. He said, gold could be headed towards 1620 and 1600 next. Where is that at? So we're at 1640. Here's a whole range, literally stopping at 1609. And he said it could potentially break that range. Then he also said if gold sustains above 1640, which is literally this, which is the weekly low, if it sustains above 1640, a small recovery towards 1655 could be seen right here, and 1665, just 100 pips up, somewhere around here, with extension toward 78 and 88, which is literally the previous weekly high, which is great to see. It all makes sense. It all literally makes sense. So now off of the weekly, I'll go to the daily. And it's all about market structure right now. Market structure, obviously we have a downtrend market structure, but the main thing to point out is after pointing out, okay, we have a downtrend market structure, but now what phase of the market structure are we in now? This is a push phase. Push phases tend to be followed by exhaustion. So, push phase, exhaustion, push phase, exhaustion, push phase, exhaustion, push phase. It does tend to have exhaustion. It's just natural ebb and flow of the market. So right now, just for positional trades and day trades, like this is downtrend market structure, but it'll be a, what is that thing called? A counter trend, a counter trend trade back up based off of market structure being down, the phase being a push phase. If we get the proper pattern of a double bottom of some sort, 30-minute double bottom, 1 hour double bottom, 4 hour ideally double bottom, take that back up for a nice good trade. So off the Richter scale, it's really like this area right here. I'm about to mark that out because what is that? Actually, I'm gonna wait till I get down to the 4 hour time frame, because that's really like the daily time frame is really just where I analyze and get that good view. But the 4 hour time frame is where I really like mark out structure and get keen on that. So based off of this 4 hour, at the end of the day, these wicks are very important to me. Now I like to enter at the most at the most pivotal point to have the lowest stop loss to maximize my risk to reward. There's many places where you can enter a trade, but why not enter at the most? If this level breaks, there's potential for a break, retest, continuation. But if this level stays intact, then at the end of the day, that has the highest potential. So this bad boy right here is a very obvious lower low. You know what I mean? 4 hour lower low at that. Period. And you can already see how this is like a range, and what this level is marked out to be already, the tip of that wick, is a invalid, we'll call it 4 hour invalid lower high. And what I've noticed in my experience, and I'm about to actually be able to document this a lot more during this journey, is what I've noticed is invalid lower highs do tend to be broken. Even if they're broken, so there's a higher high than that, but it's still a lower high, and then it comes back down, it does tend to be broken. So I'm already thinking about a buy at this level. I really am. Like, I'm already thinking a buy at this level. You know what I mean? And then if it breaks there, it has a high potential to continue, at least to, this support area right here, because we can't skip over these levels where shit really be reacting. Like, this is a major level that I'm gonna mark out to be white. It's a major level. And that level's at literally 59. You can even damn near call it 60, but it's at 1659. So that's where that is. So I would be trying to take profit at this level, if I take a trade here. And then I would definitely potentially, if this level is not broken factually, there's a sell opportunity here. If it is broken and it comes higher and a double top comes to play, there will be another sell opportunity here, and so on and so forth. Knowing that there really is 4 hour to the left, 4 hour to the left, 4 hour to the left, 4 hour to the left. Damn, see, it ain't been this low in a while. Boom. So now I would just want to mark out a little bit of this structure in this range over here, just to be like, all right, because my boy said 1620 and 1600. So I would definitely like to see what type of structure is in that range, which I'm seeing extremely clear. It's way over there, but extremely clear until about here. You feel me? Which is 1626 area. So I'll even come right here, 1623, and then it's kind of just nasty until this point, and so on and so forth. So let's go ahead and come back. Just so we know what's going on. So that's what I'll be looking at. I'll be looking at trades. If he wants to continue, they can continue. I ain't no worries about it. Feel me? You got to buy at this level. You got a potential, if it wants to break, retest, and continue up, you got to buy at this level if it wants to stay above. But you also got sales at these levels as well, and sales at the break and retest at these levels. Because if it breaks, I don't want to sell it when it's pushing down. I would want it to come back up, create a double top, and I'll sell that at that point. You feel me? So it's just patience. But for now, I think keeping the analysis very simple. You could definitely buy this level. If it really wants to exhaust and create a pattern here, you could definitely sell this level. But if it wants to continue, you could break, retest, double bottom somewhere in this range, and buy again at that level and things like that. So at that point, this is where my screenshots begin to come in. I'll start screenshotting my JIT just so I can have this data for myself. Bro, where that JIT? Where that JIT? Oh, yeah. I know damn well. Okay, I was about to say, you got me fucked up. All right. See, I like to save these and not only do this video type journal, but I also like to save these analysis. I don't know. I'm about to actually create a new folder. So this is yeah, this is challenge prep. September through October 2022. And then we'll go here and rename this bad boy. Honestly, I'm gonna just try to keep it simple at that point, because we about to have to. All right, now down to the 1 hour. Oh, you can see that. That's nice. So down to the 1 hour. Put my laptop somewhere feasible. I'm gonna make some of this stuff a little bit shorter. All right. Oh, where's that other one? All right, totally fine. So the beautiful thing is we do have a range here now. You could buy range trading is hella easy. Like literally selling the top and buying the bottom. We just so happen to be directly in the goddamn middle. So at this point, how many pips is my box, my trading box, my entry box? It's 23 pips. So based off of my current account size and things like that, I could really only have just to be disciplined with what I got going on, trying to do my own personal plan, I could really only afford like a 35 pip stop loss max to be within very close to a 1% per trade range. And yeah, so at this point, I'll be looking at buying this level, already knowing that early in the week, we could definitely start making a high and then drop back down. Very simple. So at that point, buying this level, waiting very patiently to sell this level, knowing at the end of the day, even pulling out a Fibonacci retracement tool from the top of this to the bottom of X, Y, and Z, at the end of the day, this 38 and the top of this candle, to me, is very likely to be retested without breaking literally any structure. So this is very actually interesting to see. If this breaks, if this level wants to break this freaking, what level is this? 1648 area level. If that wants to break, there's a potential trade to go up here, which is not bad. But as of now, the 4 hour was looking like the best time frame. I ain't gonna cap. But this shit gonna spark. This shit gonna bubble. So I'm gonna go ahead and actually screenshot this 1 hour time frame real quick. I don't need to make it too huge. Yeah, I'll go ahead and screenshot my 1 hour time frame. Get that popping. Now my mom calling me. My mama called me. Had to mute that jump. But honestly, the way I'm looking at it, so this is where it gets real simple. I'll be honest. This is where it gets real simple. Based off of very simply the current fundamentals and the economics, and on top of that, then the technicals and the market structure and things like that. Very clear cut. I'll say this. I will take a buy at this level. Stop loss down here. I would take a buy. Even though I know, like, you feel me, sell, go. But just in terms of market structure, exhaustion phase, exhausted way up here, came back here, exhausting again. To be honest, it bounced and exhausted. It's created a range. I would buy the low because they already said, you feel me, because continues to validate the 1640 area. It can go higher to, I think it says 1658 or 1655 and 1665. So I would definitely take a buy here as there's an exhaustion level here. But in terms of sales, I would like it to rise to sell. I think that's the biggest thing. Like, I don't want to sell at this low point. I would like it to move up to this level, move up to this level, and create the pattern that I need to then sell it back down. So as of right now, I wouldn't sell it yet until it either comes up, creates a double top, and then sell, or it breaks the low, comes back up, double top, and then sell. So my sales, respectfully, my sales are here and to be honest, I think I already kind of marked it out, but like my sales would be if it rises and falls. So like I want to sell accordingly. I want price to rise and then I'll sell so it can fall. So I would want it to fall. That's fine, but rise and then fall again. Rise and then fall again. So as of right now, sales, I just need price to move up. You feel me? And then I'll sell. So technically and fundamentally, I know I am looking for sales. You know what I mean? At the end of the day, but playing market structure accordingly, playing everything out accordingly, we're good. So this was obviously a very long-winded. This was kind of the first road mapping session that I've had live, but here it is. You feel me? Very simple. We know the technicals. We know the fundamentals. We know what's going on. I know I would want price to rise before I sell, rise before I sell, fall, but rise again before I sell. So as of now, I will be looking for buys at this level. And if it did want to break this level, retest, double bottom out, I could definitely buy again a little bit up for a day trade. And that's just what we're looking at now. As price moves and creates new levels and breaks structure and test structure, then we'll have a deeper repertoire of things that we could do. But for now, we're kind of chilling. So this was it for the road mapping session. And it's just chill. You feel me? Go wash my clothes, handle business, be a grown man, get dinner, prepare for lunch tomorrow, and prepare for my work day tomorrow. But also, we're gonna be on the market, New York session at 3:30 in the morning, live to take proper day trades. You can call them day trades or scalps, and then to see if there's an opportunity for a positional trade in the week early. So, boom, that's it, man. That's it.